All right. I'm focused up. Amazing day today, right? A great day today. Wow. Market went in moon mode. CPI was strong, but we saw it sell off today because of the China deal. China deal was bad. China's now in a way better position than the U.S. And a lot of people were hoping that we got the AI like trade restrictions removed, right? We didn't get that. Okay, so we had this weakness that came out of NVIDIA and AMD. Now I was able to play some ARM this morning because there was some relative strength there. There was a pretty good bullish divergence this morning. So I caught a quick play there. We were pretty quick to take profits though. Pretty quick to take profits on everything because the gap up was so substantial and because there wasn't a broad confirmation across the indexes. So my idea was I'm going to quickly rip stuff off the open. We caught a firm. This is the only one that was a bit of a paper hand because it ended up getting a lot more follow through. Got like $2 higher, but it was still the best day trade for today. That is. And then there was also Shop, which is the one that I actually stuck with a bit. So we can actually talk about Shop. Shop had, this is very classic, right? And I talk about these RSI divergences and then getting the RVol confirmation with them, okay? So while ARM, AMD, and NVIDIA didn't get follow through, even though there was a chance to kind of rip them off the open, I don't think NVIDIA actually applies to that. Yeah, NVIDIA doesn't. But how do you stick with a name like this when it gets that morning move? How do you continue to roll that position and stay with it? Well, the big thing that I'm looking for is when I see these RSIs resetting like this and the stock is clearly still in an uptrend. That's what I'm talking about when I talk about these bullish divergences. And we look over the previous day, we've already had like this prolonged period of consolidation here, even more prevalent across higher time frames. But then on the day of the breakout of major key levels, you're seeing these continuous resets of the RSI stock still clearly in an uptrend. And that makes me stick with these plays and stick them out a bit longer. Even into and you could see where the trend started to fail is when we started to really break the key level there on the RSI structure. And then the stock then kind of settled at the end of the day. Now, that said, tomorrow, this is another play that's going to be on the table. So what you're likely going to see actually, and we'll see if this pans out tomorrow, but what we're likely going to see is going to be something like the pre-market's going to form a area of chop like right through here at the pre-market. So what we're going to watch is to see if we can kind of like test the bottom of this or chop in it and then get another breakout, and that'll be the extension we look for. If it's a little bit more miserable than that, then you have to wait for the previous day's highs, or if there's a pre-market high above this box, then you could play the continuation. You could take another day trade tomorrow. But that's one of the things we're going to look for, because while a lot of things are selling off across major big tech, this really isn't a day where I'd say that things got bearish or falling apart. There was a headline that I thought was a bit concerning that sounded like it could have been some war fears, especially when we saw selling kind of pick up midday from big tech. But when we look at the VIX, like the VIX isn't really picking up all that much. We did see it climb pretty sharply, but then we got the sell off into the close, kind of back to this 1730 key level. So if you go gap below that, you're going to see the squeeze continue, the squeeze effect continue, right? I think names within the Russell are actually at all-time highs for short squeezes. Now, it would have been better. It would have been better for the melt up mode had we held this. This was reversing today, and then it actually finished denied the reversal into the close. Okay, so it would have been better if that would have maintained itself, but I'm still not seeing signs that it's time to get short yet. It would be kind of poetic to kind of fake out my big short box, right? I mean, we've been staring at this chart for months now, right? For months now, I've been talking about this chart. Like, I want to be looking for shorts here, and if it breaks out of the box, then I'm going to be looking for all-time highs or a double top at a minimum. And so now we've kind of faked out the move so far, but we haven't really closed below the box yet. Okay, so this is the big area where I was looking for. If we start to take this out, maybe we take out 6,000 on the downside again. Okay, all right, we might consider some shorts. As of today, though, with CPI coming in light, expectations for a cut in June going up, I kind of maintain some bullishness here. I will say that the likelihood that there actually is a cut, despite what the market's saying, I think is pretty low because the tariff war is still going on. And we've heard from the Fed multiple times that they don't plan to do those cuts with the tariff war. Now, here's the beautiful thing about the construction of the swing account right now. I'm still pumped. Like, it's still beautiful, right? We have this UNH position on, which is giving us this big signal on the daily here. I mean, finally. And I got in early seeing that this was about to fire to the upside. And then I was using smaller time frames to kind of confirm it. Now, what we want to see to try and maybe take some day trade accounts here is on shorter time frames. I really need this R vol to pick up. So like we're at a 0.45. We want that at least over a 1 before we start taking like some weeklies and stuff and trying to really hammer this trade to the upside. But the one thing I will say is we are near the high of the day on this stock, but I am up an extra 10% on the position. The inflation of those premiums is a massive positive. It means interest is pouring into this. And I think earlier today I saw 150,000 calls. Now we've closed the day with 220,000 calls traded on the day. So as the interest pours into this, the premiums are going to spike because the market makers can get more for it. It becomes way more interesting. We want those premiums to continue to inflate. I only closed 1/4 of the position. It's a large position, second largest position behind HIMS for me. As for HIMS, we got that headline yesterday that was bearish because Bloomberg put out a report saying that Eli Lilly is not going to make a deal with HIMS because HIMS still uses the compounded semaglutides. And Eli Lilly, a little pretentious. They think that that's not safe, and so they're trying to establish themselves as like the premier brand and the arbiters of safety per se. So that's old news, though. Super old news. And I told members, like, I don't sell shit on that news because I've already known that for weeks that was not going to be likely. Now, I actually just realized after that Bloomberg report that Ro, though, which is another telehealth company, but they're like ass compared to HIMS, actually also still sells compounded semaglutides, and Eli Lilly still signed a deal with them. And I know lots of people, especially in the socials, were arguing me saying that, on May 22nd, they had, that's when the FDA banned the semaglutides. You can no longer sell them. There's actually still exceptions to that rule, so you can actually still sell those. Additionally, HIMS has also made comments about trying to get approval. No. HIMS has way better margins on these compounded semaglutides, so I don't really blame them for kind of considering going the FDA route. However, if they want to deliver in the stock price in the immediate term and probably make some longer term money, they want to make this Eli Lilly deal rather than waiting for the long 3-year process of FDA approval. So whoever's butt they got to kiss to do it, they probably should. Eli Lilly, lots of people are saying Eli Lilly wants to dominate the market. And, obviously this company currently is, right? But you got to remember that NVO was as well, right? NVO was first. Look what happened to NVO when Eli Lilly came out. Eli Lilly's management's got to be thinking, okay, who's next that's probably going to wipe us out? I'll tell you who's next. It's going to be Viking Therapeutics, which we already have a position on. These calls are finally starting to get some premiums. We have this, it's getting a little bit wonky now. It would have been better. But we have this little bit of a inverse head and shoulders kind of playing out here. We really need this thing to break and hold above 30, and this thing can moon to 40 before you know it. But this is the company that can disrupt Eli Lilly. They're definitely third in line, first in line when it comes to the efficacy of the medication and the least amount of side effects for it as well. So this is one that I've also got in the portfolio, got a sizable position there in the swing account, got a smaller share position in the investment account. I'll be likely to build it up actually after we get confirmation of, honestly, I probably won't put it in my long term until after I see the trial data. So the phase 3, phase 2 trial data for some of the medications. But that whole story is really interesting, and it's really interesting that we saw like downgrades on McDonald's today as well, due to the semaglutide concerns. talking about this company like losing like 40 billion off of their market cap because of the popularity of the weight loss drugs. This is very bullish, right? It's very bullish Hims, very bullish NVO, very bullish Eli Lilly, and it's very bullish Viking Therapeutics. Viking Therapeutics isn't really following through because there's still a lot of bearish reports here. Personally, I think they're all invalidated, but you are before the FDA approval, even though the data is very promising so far. So keep that all in mind. I really like these healthcare names. You know, we saw on the war headlines and with the broader market sign off who's getting the rallies, who's getting the bids, who's getting the interest. I mean, it's United Healthcare, right? You know, this thing had got brutally smacked, but it's a value name that is deeply integrated into the U.S. economy. All insurance companies have deep roots in pretty much all things finance. You know, they hold a shit ton of assets, almost if not more than banks in some cases. So, and UNH is no exception. So this is companies too big to fail. They actually can't be allowed to fail. The government will step in and save them if there actually is something catastrophic. On top of that, you're trading at a trading. Excuse my fumble there. You're trading at a 12 P to E ratio. Super cheap, right? If the market does start to turn over here, this thing can absolutely rally, get a ton of attention as people look for like safe, cheap value, right? It's probably like the number one name if you're looking for that. So, and I like that we're flipping on the daily. We've broken the shorter term trend line here. That's great. We're far, and on top of that, like we broke out of it, and then the previous key level 307 then became the support. So we even back tested it, and then we went back up. So this thing should be on a moon mission over the next few weeks. 326 should be locked in from the way I'm looking at this right now. Beautiful. So, and I really want to try to ride this one hard. And I'll be looking to see if the RVol can come up, like we said earlier, to see if we can catch that. Now, there's some names on the peripherals that are still running really well. TEM's pretty interesting. You've got like an inverse head and shoulders and a cup and handle playing out here. So I'm trying to keep a close eye on this. This is another like healthcare, but still like AI name. It's kind of like healthcare safety, but you've got this like tech twist to it, kind of like Hims. So it's catching a lot of interest there. I noticed that on the quantum stuff, like these are, and let's be clear, if the market is going to turn over, this is basically like the short list, except for IBM. But you know, the QUBT is definitely a top short for me. If the market does start to turn over, QBTS is number 2. And then Rigetti and IonQ, these are names that probably are overvalued, but I think you got to kind of treat them with a little bit more respect. The tech's a little bit better and has more longevity. QUBT is actually, their use of quantum is like been around for ages and has no use cases. This company doesn't make any money. It might be a total freaking scam, honestly. It got a massive short squeeze today. It is not the market confirming that this company is worth squat. We also got big news out of uranium today. And so I got to keep these on the radar. Super big bummer that we missed the move out of Oklo today. That's a move I would have really liked to have caught, especially since I've been keeping such a close eye on these names. We also got a big move out of SMR today. I don't feel as bad about missing this one because the holding company is still dumping shares right now. So this actually might be a short. Coming off of this news. It's pretty shocking that Oklo ran like this and they didn't even seal the deal with I'm pretty sure it was either the Navy or the Air Force that they are working on a deal with as a nuclear provider. But this company, again, shorts were piling into these names. They were piling into this market. We talked about like if we break out of that box, we should see these short squeezes. And we're seeing the short squeezes, which makes me think that the market is still overall bullish because of the breadth. Okay, so you know these things that are further out on the risk curve, don't, and I know it might sound like energy names not on the risk curve, but this is like futuristic technology that isn't quite yet existent. It's still kind of in the prototype stage. Getting massive bids like this, hitting these evaluations. Oklo's worth almost $10 billion. They have $0 in revenue, right? This is definitely a hype cycle. This is 2020 type vibes. Now it can go much longer than you think, and today could have been a fake out as like smart money gets in. So Is there any questions for anything I've said so far? Haven't been paying attention to the live chat in the Discord. If you're watching this on YouTube, if you're in the Discord, you can always join in these chats and you can ask your questions here. I don't see anything right now, but I see some people typing. So let's actually take a moment and kind of stretch out our time horizon and talk about long-term thesis. Now, I am still, we talked about this being the short this is where I want to start looking for shorts. We didn't really not get much confirmation. The only thing I was able to stay consistently short on is Apple. Actually, I am still short on this company. This is still the weakest chart probably of the big tech stocks. We got the break below 200. I actually sized down a bit in this though, as I was kind of rebalancing for a more net long portfolio in the swing account. So we'll see if I have to immediately pivot out of that. But what I'm thinking about is I can't close those because we're kind of in a euphoric state. I saw what could potentially be perceived as growing turmoil that could lead to war on the headlines. The tariff deal was awful, horrible for the U.S., great for China. And I really want to drive that home because that could easily, as headlines come out, as people do the analysis of how things are playing out, you're going to see headlines about how China can take over. I fully expect that to be around the corner. How far ahead China is in nuclear and robotics and everything, because in many ways they are, right? So I'm looking to see if we could get some of those. DSB says, seems like one bad headline could print to the downside. Yeah. So that's why I want to keep these short names. That's why I really like the big UNH position. That's why overall, when I'm playing these tech names, I'm getting in and out and I'm locking profits really quick. But when it comes to the healthcare and the things that could be considered more value and a little bit more defensive, but are still running in some cases like HEMS, that's where I'm putting on more size because I'm just feeling like tech is really overvalued. I don't have as much upside as I do in these other sectors. Now, that's going to be wrong if we get the short squeeze. And it's also going to be right in the long term when these tech stocks melt down later in this year. I still fully expect a massive sell-off into the end of the year, and there's some analysts who think that we've actually got 10 years the U.S. stock market trading sideways as money starts to leave the U.S. And honestly, I think that the outcome of the tariff, what would you even call that? Negotiations with China does kind of build that thesis. I still think we believe in U.S. exceptionalism. I think forecasting anything for a decade out is just not even a part of my job, and the likelihood I'm right of anything is just going to come down to pure luck, especially when we're talking about the transformative technology that's coming out right now. So I still believe, though, that what we're going to see is that the tariff inflation hasn't hit yet, even though we're hearing from companies that it's on the way, that higher prices are coming. Schmucks... Is it Shucks? Schmucks, the jelly, peanut butter jelly company, came out and said that tariffs were going to be a huge issue and their stock dumped off. So we're hearing about that right now. SJM, yeah. So we're hearing about the inflation coming up for broadly in the market. This is going to bring this market down. It's these flows and just kind of a drunk market that's kind of melting this up higher. That's not the only warning sign that I've seen, though, because we also have Citigroup saying that they're preparing for hundreds of billions and hundreds of millions of bad loans to come through soon, as well as people load up their credit and kind of the savings goes down as inflation becomes persistent, as the stagflation story plays out. I was a little clickbait with the live stream today, calling it stagflation fears invalidated, because honestly, for stagflation, we don't really need inflation to the moon right now. We just need signs that growth is going to be kind of stagnated. And there actually was a little bit of signs of that in the data, and there has been persistently so. So I don't want to get too carried away with upside. I think, at best, maybe you see 6,200 and then the market dumps. I did notice that the big banks did do some raises on their end of year targets. Because like we talked about at the beginning of the year, I was actually way more bullish than almost all the big banks. But still like looking for this massive dip today, or this year rather. So I did see that they're raising their expectations, but they're not going to the like 6,500 or 6,700 that you see the retail guys on social media talking about. So I believe it was Bank of America raised their target from like 5,400 to like 5,600. I think JP Morgan raised theirs to 5,800 for the end of the year. So pretty much everyone's like anticipating that this is going to lead to a big sell-off. I actually think we're going to see something that's like a bit more aggressive in August, which then has the potential to turn into the end of the year, or we're going to see that multiple compression that some people are pandering about, grifting about, trying to pump their European holdings and China holdings. So we'll see what comes. For now, I think we're positioned great. It hasn't been the easiest market right here. I managed to make good money without getting too carried away with some of these companies that don't really have sturdy foundations, right? So a lot of these, market caps are really built on sand. So like DSB said, it seems like one bad headline could print to the downside. He's absolutely correct. There's a lot, I think, of geopolitical risk that really isn't being factored into the market. I think too many rate cuts are being factored into the market. But at the same time, you just can't, this reversal, had it held today, I wouldn't, because it didn't hold, I decided to kind of size down in some of the swing positions. But if this held today, I would have been near max risk, looking for a pretty vicious squeeze to the upside. This move on Oklo that we got today, I think we had a member make a ton of money on ASTS today because there was more squeezing here. Okay, it hasn't really played out today, but you can see over the past week a ton of money. He's made a ton of money here. This thing could easily squeeze much higher. There's a ton of short interest here. And actually, let's also not overlook the fact that HIMS is still the most shorted mid cap on the market right now. The company that I'm probably the most bullish on right now, we're talking about they're starting to become leaders in men's health, these men's clinics. I have a bunch of old clients back when I did sales with insurance, who are doctors who actually own these men's clinics, pretty much all throughout the Missouri area, and these guys are making absolutely ludicrous amounts of money. They spend most of their year on vacation and have a few nurses work the office, and they're good. There's that. They're making so much money off of these clinics, and HIM's trying to get into that and trying to get into the peptides and stuff. I just know for a fact there is ludicrous amounts of money, and that's not even including what caused HIM's to rally the way it did, which was related to the weight loss drugs. So if we already had the partnership with Novo, so we can really seal the deal on Eli. And then I would love to see, someone mentioned that they would love to see HIMS take a stake in Viking Therapeutics. I think that would be beautiful if they did that, because that could be a big future earnings boost for them to have that position on. I know NVIDIA's next earnings, mind you, people might be looking for demand to come down, but they might get caught off guard by the fact that NVIDIA has been making some killer investments lately. I almost took NVTS. Wait, did I type it in wrong? Yeah, NVTS. After NVIDIA bought this for $2. It's $7 now. And they bought 15% of it. So they're already up a killing on this. And it's probably going to go a lot higher. I almost took it when it dipped down to 519, but sometimes you just hesitate and you miss the opportunity, and you just don't want to chase what you feel like is just a FOMO reaction. So Oh, nice rebound off of AMD in the after hours here. I was gonna say, I believe AMD is still in the golden setup range where we're getting the flip on the weekly here with the massive breakout as confirmation, unlike, this kind of like fake move right here, which actually didn't break the trend line. We're actually getting a break of the trend line, and I believe the daily is also giving confirmation. Yeah, so even with the retracement here, on this name, on the semis, like we're still seeing semis, not semis. We're still seeing like confirmations for a further move to the upside here. So, the rest of June, maybe into July could be bullish. What's going to throw that off is when the Fed likely doesn't cut on the 18th. So maybe we'll get like a nice explosive move until then for the next week. And then on the 18th, maybe we'll see a retracement that maybe gets bought up again until July really gives us the Q2 GDP numbers, and then maybe we can actually start to bring the real concerns to the market's attention. Dollar down, debt up. And that's another thing. Like the U.S. dollar, this looks like it wants to tank. I'm actually surprised it even held this support here. So 97, we should actually even just put this on the key level here. But I've been watching DXY very carefully because if this gets a pretty brutal reversal, it's gonna cause tons of problems for Trump and his tariff negotiations. So like he wants a weak dollar to kind of strengthen his position on these, and on top of that, the weak dollar is actually going to be pretty supportive of the market right now. And at the same time, if the velocity is too fast, if this thing starts tanking, like, if it drops, like we're talking like $2-3 in one day, watch out, it will crash the market instead of being supportive of it. So like when we're talking about even like Forex, or we're talking about TLT, what causes disruption in the markets is really the velocity and momentum of the move. So just keep that in mind. But so far, I mean, everything is honky-dory. Market is kind of, I shouldn't say honky-dory, but market is very complacent. A little drunk right now. So, yeah. If I don't see any other questions, that's kind of like all my thoughts currently. We've done like really good job lately of having solid picks here. Let me actually change what I'm streaming here. I shared this, and I hadn't shared this before. Let me change what I'm streaming here. But like I shared this morning, but this is the scan tool that I use every morning. This is pretty much just open all the time. This is actually built into TradingView. The new scanner, I used to use actually a different tool from investing.com, and now I use this now that they offer this. But when I'm doing those pre-market watch lists, first of all, I'm going through what has kind of already been trending, and then I'm using these so I don't miss stuff. So like when we're talking about like Archer suddenly on the radar, or when something I haven't been talking about suddenly makes the radar, it's because it hits this watch list, and it's a very simple construction of this as well. This is just a gap scanner, so I'm looking for a pre-market change above 3%. I'm looking for the 2 billion minimum of market cap, and then I'm looking for the relative volume over 3 for the 15-minute chart. And what that tells me is that not only is this stock likely getting a breakout because of the gap up, but it's also likely got a nice catalyst driver that's causing an increased amount of relative volume coming into the stock. And so those increased amounts of relative volume are where you can see those big follow-throughs like we saw with Shopify. Whereas we didn't see that volume, that relative volume confirmation for something like NVIDIA. And even though you had the major break, this thing ended up puking back to the downside. This is also, it's not really kind of an unfair comparison because we got a negative catalyst for AMD today. It also is part of the bullish thesis that the fact that there wasn't an increased amount of relative volume on a big selling day, like this is pretty low volume selling, so which is bullish. So Jake says Carvana to 0. So you got to be a little bit cautious when we're talking about like the market squeezing, because this can likely do the same exact thing. I definitely want to take Carvana short in the next earnings, but that's not until July. So I've literally just ignored it and just, I mean, we had to throw in the towel on the short position like a while ago. So um, actually, I don't even know if I did. I might have like a few left that are down like 80, 90%. But we've outperformed those losses, 3, 4 times over. I think I'm up. Let's see. I want to be careful not to accidentally share my account info. Let's see how much we're up year to date on the swing account. That's not what I want to see. Let's see here. So so we're up 117% so far on the swing account this year. To be fair, I think we made like 30% of that in the course of a week because of Hibbs. I was up 100% on one point of the puts, and now they're down. Yeah, well, we got that crush. You got to be solid when you take the profits, right? It's like kind of like the same thing with Apple, where every time this thing kind of gets a gap down, like I sold some here, and then I bought some more here, and then I sold some here, and then I bought some more here, and then I sold some more today. And every time I get that move in my direction, I'm kind of unloading it and then building it back up, especially when we're talking about like the lead positions. The only stock I have not done that with, because that's what I typically do with like my lead positions, is like I get to move out of my favor, I buy a bit more, I get to move out of my favor. And that's kind of, it's very opposite of what you do with like day trading. Like if something's not working for me on a day trade, I mean, very, 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 very rarely am I going to buy more of it. But with a swing position, so long as it's fundamentally still okay and intact, I'm going to do that. And the only name I don't is with Viking Therapeutics, because there's really just been no opportunity, honestly. We set up those swings once we got into this chop zone, and so really, if you wanted to buy more, you're just buying more, kind of at the same price. Yeah, Carvana's up. Yeah, I know, but I think Carvana's probably still really scammy. Carvana and QUBT are the two that might be full blown scams. Someone might go to jail over these two. Carvana's numbers don't make any sense, even when you compare to like CarMax. Like CarMax had their best quarter ever, and Carvana doubled their margins. Which is insane. It might have to do with how they're calculating like the interest they receive for the loans that they have. They might be adding it to like the margins, but I feel like that's a stretch. But I'm not necessarily an expert. I'm just kind of speculating on what's going on there. I think their guidance was that they even beat this quarter. So I would be interested to see if even this dip is being driven by insider selling. But I want to short next quarter into that. Kind of go for like a lot of position. Let's see if this thing might actually even just like double top and then puke all the way back down, which would be really cool. But yeah, when you're talking about squeeze season, you got to get out of the way. Actually, let's just go ahead. I wouldn't mind actually just real quick looking at to see if yeah, like most of the shorts have literally given up here. Only 7% of shorts left on this name. And it trades at an insane 115 PDE ratio still. It's wild to me that in this market environment, with what's going on economically, with all the failed auto loans, that you would want to pay 115 PDE for a company that's probably in the most and like the riskiest sector right now. Yeah. That's bewildering. But hey, people going to do dumb things. What you going to do? You can't They're going to get smacked in the face. You just got to let it happen. Karma comes. We can go for like another 10 minutes if anyone else has got some questions, looking for some, last comments here. If you guys got any questions about like trades we've been taking or positions we've been taking. I think today there were some swing positions into today that I cut for a loss, but I don't think we lost a single trade that we took today. All the day trades were like 100% win rate. Despite kind of a tougher chopper day on the index, you kind of play. We've done I will say, like, my execution on some things has been a bit rough, but there's one thing that I've been doing like really well for like the past 2 months is like catching these trends and sticking with where the interest is, and like the morning selection. Like, even if I'm not picking the names that are doing really well, I'm really happy with the process we've had for like keeping track of sectors and also picking out names with interest and sticking like to the best catalysts. Like, I think that's been a really good process. So if you're also wanting to get these lists, you've missed. I've been sharing these links, by the way, of these organized lists, for like nuclear, and then they're all subcategorized as well, and what role they play within the industry. So if you want these, just send me a DM or at me in the Discord. I did post links though, but you can literally just plug these in to TradingView if you would like to utilize them. But I've been making these for every sector. I'm going to make a few more this upcoming weekend as well. Bitcoin chart, we could talk about Bitcoin. So DSB, actually, you specifically tagged me in a guy's post, and he was trying to say that Bitcoin won't go over 110. He had, I believe he had something like this wave formation, like this was wave 1, 2, 3, 4, 5 or something like that. I think it was even more goofy than that. I think he said like this was wave 1, 2, and then he had like 3, 4, 5 or something. Just from the eyeball test, without even looking to see if he did his fibs right, like third wave is never, ever the shortest wave in Elliott wave theory. A lot of people don't like Elliott wave theory, but it's because a lot of guys like him actually just really suck at it. They didn't bother to read the book. I mean, that's literally chapter 1 stuff. Like, third wave can't be shortest wave. So I will say, like, Bitcoin's clearly broken out of like this trend line right here, breaking out back to the upside. When we look at the daily, we're about to get the reversal in the TTM to confirm to the upside. And we have the same thing on the weekly where it's like, it's not the same thing, where it's already confirming to the upside. So you've got a really healthy TTM structure. RSI structure on the weekly says that it can go a lot higher. The RSI structure on the daily isn't amazing, but it's still in a bullish mapping. So I don't look at this chart in any way. Do I see a reason to be bearish here? So we're still kind of waiting to see if my fibs and Elliott wave count can pan out rather. So I'm looking for 114 and 132 above that if we go in full squeeze mode. And then if you break cleanly above 132, there's a chance you can go to 140 before this kind of does another big bear cycle, probably back to the downside. But I say probably. I probably even shouldn't. I should just say a chance it does that. Due to the way that gold and stuff is acting, like gold can probably be persistently strong in the face. I mean, even today we had like a CPI was fine, and this thing just ended up mooning into the end of the day as well. It kind of tells you there's a lot more going on here with gold than just like the stagflation story. This is a very like global name. Now, that actually is something else we should talk about, because some of you might have more interest in this than me, and you might be wanting to play it. If you do historical analysis on platinum, which is now like fully rallying, platinum actually tends to chase gold pretty hard, even harder than silver. And historically, even after like previous runs and relative price, platinum can, in these big like squeeze moments, actually surpass gold. So keep an eye on it, because this is really picking up, and I don't think this is anywhere close to stopping. And there's those points where it actually tried to play catch up with gold and even surpass it sometimes. So we could clearly see like this looks like it just broke like a major multi-decade trend line peak. So this doesn't look like where you moon and then you pump and dump it. This looks like you moon and then you moon again and you moon some more. This looks like the beginning of a bubble. It will be a bubble, but when we're talking about these big global macro moves, their bubbles aren't going to be like equity bubbles. They last more than like a few months or a year. Sometimes they can go for 3-4 year periods. So if you have interest in platinum and you want to be trading futures here, you can do it. If you do want to take just a, I can't remember the ticker, but there's a platinum, why can't I think of it? Spot, CDF rolling. Platinum shares. No, I thought there was a trust. I don't think this is it though. Oh, nope, that might be it. Yeah, this trust has actually got a really good correlation, but it's not the one I was looking at though. But you can look through the platinum trusts. I don't know if I want to spend our last few minutes like digging through the different platinum charts, trying to figure out which trusts I saw that actually had a decent market cap. But you can look for different interests. Maybe it was maybe it was this. That's the futures. Never mind. Yeah. Sorry guys. I'll try to find it later and post it. I remember seeing one though, that actually had some decent volume. Or if you want to put a small position in that $200 million market cap, I mean, it's a platinum trust. It's not like it's going to get nuked overnight. South Africa is major. And it's probably red. Probably platinum could go to 10,000. I doubt platinum goes to 10,000. All the platinum in the earth feels like 6 inches in an Olympic swimming pool. Gold gets like 4 pools entirely. Okay. Yeah. I mean, none of that really, that's one thing, right? But what's probably going on here is that's really just the cover story for the greater trend. That was probably the trigger catalyst, but people are going to look at this chart now, take interest in it, see the correlation with gold, and they're going to bid it up higher. Like I say that with like pretty high confidence that I think that's probably what's going to happen. Because that's even immediately what I did. Because I immediately thought, oh, does this trend with gold? When I saw it move, because the gold move is, if you are like convinced on my idea that we're gonna get a big sell-off on the end of the year, just keep looking at the gold chart and say, why is this the best performer? Better than any equity, better than Bitcoin, better than everything. Why it's not happening for no reason. It's not a meme stock. It's not a shit coin. Like there's a real serious reason why serious money is buying this and not freaking selling it. I can't tell how many I've seen so many retail guys tell me they're gonna short gold here. I don't touch this to the short side at all. I think everyone wants this to come back to like probably 28, or maybe they're hoping for like 260. I see so many people wanting to buy the dip on gold, which tells me it probably never dips and it probably just makes another leg to like 400 before it does that. Because even with equity selling off, all this thing did was just consolidate sideways at the peak of a bubble, quote unquote bubble. Okay. I think we've gone on long enough. I can feel myself kind of now getting repetitive and kind of talking about things I've already spoke about. So thank you all for coming out. Hope you learned something. Did we learn something? Was this helpful? Can I get some ones in the chat? The year hasn't played out as well as I would have liked. I would have liked this to create a great short opportunity. Now we have to be more patient. Now we have to kind of sit on our hands. For my long term, I'm sitting on a shit ton of cash. I'm kind of bummed about Not trying to play some of this to the upside, but at the end of the day, having that money on the sidelines when some of this stuff pukes back up, like when quantum and when uranium kind of puke back up, I shouldn't say uranium, but when quantum and nuclear puke back up in the second half of this year, there's going to be some amazing deals. And so like this period that's kind of getting interest in these names is a great time to kind of pick out the players you like. Maybe take some starter positions. Like I've even taken some starter positions. BWXT is actually a really impressive company. That's like way ahead of Oklo and SMR. And so, I'm kind of building these up, and then I'm going to look to average in down on the incoming dip that's going to come later this year. And then we're going to also short this to the ground later this year as well. So, that'll be it, guys. Thanks for coming out. Hope you are performing well. Everyone making money. Put a one in the chat if you're up on the year for trading. Jake's making money. Corky's making money. Good. All right, maybe we'll run a poll. I want to make sure everyone's doing well. It's been a very oddball year. So, I think that's all I got. Y'all have a wonderful night. God bless.